Hello everyone, welcome to Exam for 50% faster preparation. This is a very important video if you are preparing for RBI. RBI has achieved a very significant milestone, completing 90 years. RBI got established on 1st April 1935, and this journey of 90 years, RBI is an institution which is older than Government of India, has done many significant things. Deepening financial inclusion, that is the mandate, that is the wow RBI still takes today. But in this video, let me summarize what are the 90 most important things RBI has done, starting with its establishment on 1st April 1935, when RBI got established to regulate currency, manage public debt, and function as a banker to the government. This establishment is itself an achievement because after the Hilton Young Commission report of 1926, it took full 9 years for government to decide. The committee was arguing what to give RBI and what not. Unification of this monetary authority in 1935, therefore, coming this unified currency and credit control under RBI, reducing the fragmentation of the monetary system is big achievement for the India's structural financial framework. Role of RBI as a banker's bank. Initially, when banks were asked to deposit money with RBI for CRR purpose, which was actually primarily meant to provide the money for RBI's functioning, there were many questions, but RBI became lender of last resort, providing liquidity in the commercial bank, safeguarding the interest of the bank in case of there are collapse, and which is critical again. Development of Research and Statistics Department in 1945 to gather economic data, support evidence-based policy making for practical and crucial advice to government and governance. Still important today, RBI's data is trusted very much. Introduction to cheap monetary policy in 1946-47. This is the time our country got independence. Stabilizing interest rate and maintaining market confidence was very much required. During this time, RBI did banking for India and for that time Pakistan, and today Pakistan and Bangladesh. RBI played a very critical role, balancing inflation, providing cheap credit, managing the crisis of this time, crisis of the financial stability. RBI's involvement during the partition crisis to ensure financial stability, exemplifying the importance and resilience of the central bank. Pakistan also trusted RBI during this time. Exchange rate management, when the global uncertainty was there and Bretton Woods conference resulted into outcome of IMF, World Bank. Managing exchange rate post independence was a crucial task, help maintaining economic sovereignty and balance of payment, still ongoing with RBI. Coordination with this IMF and World Bank in 50s to strengthen India's position in global financial negotiations is crucial on international relation and economic situation. Then comes supporting cooperative banks, which were the institutions very important at ground level, helping their financial needs, and these cooperative banks reaching to the last mile. Then, if we come to the important thing happening in the post independence early 50s, liberalizing agriculture credit. Agriculture growth was the need of the hour because half of the GDP was coming from agriculture and two-thirds of the population was depending on agriculture. Here, helping the Ukrainian economy, RBI provided credit to agriculture. Then financial sector reforms, liberal credit policies for adapting global economic shift, proactive stance that kept India's banking sector resilient, establishing industrial financial institution IDBI 64 and mid of the 50s, also helping the industries. Here, private capital was not available at that time for industrial development, a long term commitment for industrial growth by creating such institutions. To ensure that public confidence is there in the banking system, banking deposits has to be insured. RBI therefore created this institution called DICGC, which ensures your deposit. So today also deposit insurance is done by DICGC. The institution was created in 1962. This is wholly owned by RBI. A very important exam questions. Up to 5 lakh rupees of the amount today your bank deposits are insured. Even if the bank fails, you will get your money back. Banking sector consolidation efforts in this time to link indigenous bankers with modern banking, help integrate traditional financial practices. Then managing deficit financing in 50s, also there were fiscal deficit. Government has to spend more on social sector. RBI did good inflation control, manage the public debt. Currency stabilization effort in 50s, stabilizing the falling rupee against external pressures, maintained financial stability, and protected the national interest against the global situation. RBI's role in rural credit, establishing rural credit system through surveys and cooperative movement, fostered financial inclusion. The term financial inclusion came later, but RBI was always doing this. Establishing State Bank of India, which was earlier Imperial Bank of India. This was nationalized in 1955 to improve the banking help for national development. It was named as State Bank of India after the nationalization. Then comes the era of 60s, in which there were banking turnaround, foreign exchange management, and 1996 devaluation, strengthening foreign exchange reserve. That was the time foreign exchange was very, very scarce. And it this scare position, the position of plenty today, it has taken decades. Here, if you want to understand what all RBI does, if you want to work with RBI, so I will suggest you must go to this exclusive course for RBI grade B preparation. Here you will get, and I'm telling you, you will get a free access to these videos, test notes, and also recorded classes if you check this demo. Yes, you can just register here for free and you can check the demo. You will find phase 1, all the topics here written, and likewise phase 2, ESI, finance, management, ethics. You can check the videos here, pre-recorded videos on these various topics. Say understanding financial statement, or say ratio analysis. And dual part is at the end of this video, you will have concept check question. You can take these tests and check your understanding. The course is designed in such a way that by skipping many of these video in phase 1, phase 2, many of the videos and notes you can skip by doing the test at the end of it. Means you can attempt the test before you start studying if you know the topic, and therefore you will skip large number of such content, and you will prepare 50% faster, because there is no point investing your time in a topic which you already know. Back to the discussion, we have role of agriculture. This is green revolution time, and RBI played a critical role in enhancing credit for agriculture and rural development. Innovations in public debt management, efficiently handling the public debt. Public debt is the debt government borrows for managing its fiscal deficit. RBI came out with different instrument here. Promoting small saving and financial literacy, public participation in the banking system was not enough. The deposits also need to be garnered from the public, because the money which was otherwise lying with people idle will come to banking system and it will help in the national development. That was done by fostering public participation. Implementation of monetary budget, fostering money supply to balance inflation and growth. A systematic approach was followed and addressing banking failures. Banking crisis where there some bank failed, RBI helped protecting the depositors' interest, protecting the financial system, and that approach continued till date. Introducing treasury bill operations to help government borrowing through treasury bills, it becomes a structured method of financing public debt by RBI. Promotion of financial research and data analysis. This is like earlier I talked about statistics department. Here it is DEPR, Department of Economic Research and Policy, which was established in 1961, because the credibility of the RBI data is much more. Establishing moral suasion as a policy tool rather than giving strict stringent regulation to banks and regulated entities, RBI started using moral suasion as a policy tool. And the next phase comes financial intermediation. Beyond banking, NBFCs were the major role player, encouraging diverse financial institutions to build a bigger ecosystem and critical for economic resilience. NBFC's early regulation, protecting depositors and maintaining financial sector integrity here. Introduction of branch licensing for bank, encouraging geographical expansion of banks, especially in the areas where banking were not present. Improved the financial outreach, and those were the days digital banking was not possible, nowhere heard. Significant for promoting banking access. Nationalization of the bank, most significant event in the Indian banking sector. Indira Gandhi was the prime minister. 1969, 14 big banks. So earlier, what used to happen? These banks were promoted by corporates, and they were taking public deposit, mostly giving loans to related entity. So the same corporate were getting benefited. Government took this initiative, making a turning point in the Indian banking system. 14 big banks nationalized in 69 and then 6 more in 1980. Critical planning framework, the concept of credit planning was introduced, integrating monetary policy with physical planning. And deposit insurance expansion. So DICGC started in 62, but 67 DICGC was amended. The act was amended, and cooperative banks were also covered under this deposit insurance, ensuring the financial security and the protection of depositors' interest. Lead bank scheme, if you don't know this, you are still not seriously preparing for competitive exam. 69, based on the Gargill Committee report, initiated for better banking services in rural areas. In every district, there is a lead bank appointed by RBI. So in one district, it may be Bank of Baroda, the other district, it may be Union Bank or SBI, or it may be a private bank, ICICI Bank. That bank consolidate the banking effort for the development of that district. Still, this scheme is continuing. If you know the latest committee which recommended continuation of this scheme, you can write in the comment. Agriculture Credit Corporation was established in 1968 to address the gap in agriculture, and ECGC, Export Credit Guarantee Scheme, ECGS, facilitated increased credit flow for export activities, boosting trade. And then comes the time of banking use for development, later half of the 60s and then 70s. Social control over bank, reforms to align banking system with economic and social goal. National Credit Council to prioritize credit allocation in line with development objective. Special bearer bond launch to mobilize black money into productive channels so people can invest in these instruments. So some amount of loss of the exchequer in terms of the taxes they have not paid, but at the same time, because this money was otherwise not coming to the formal system, so that rebate was given, and these bonds people are allowed to invest otherwise unreported income. Branch licensing policy implemented to rationalize the establishment of new branches based on the need of the local situation. Export credit subsidy scheme of 68 for reducing the cost of export finance to promote export required for earning foreign exchange. Establishment of RRB is a most significant step towards the rural banking side. 1976 the act was passed, but the first bank, Indira Gandhi was the prime minister before passage of the act by ordinance. She established this bank on 2nd October 1975, headquartered at Moradabad, Uttar Pradesh. The name of the bank is Prathama Bank. Then NABARD was created as a separate entity in 1982, 12th of July, for supporting agriculture and rural development finances. Department of RBI was set up and carved out in form of NABARD. Multi-agency credit approach of 69 adopted to integrate commercial bank in agriculture finance, and credit control guideline introduced norm for bank advance against shares to stabilize the capital market. Loans against share were restricted in this guideline. Preparation for reforms started happening in early 80s. Support for Sikh industries formulated policy guideline for rehabilitation of the financially stressed industries, and in 81 enhanced credit delivery through cooperative bank in rural areas. Credit guarantee scheme like SME, CGT SME today facilitated credit for small scale industries. And Export Import Bank of India was created. Also, National Housing Bank was created to dedicated efforts of housing finance in the country. Housing is a necessity, and it is also promoting the rural infrastructure. Setting up Discount and Finance House of India 1988 to improve money market efficiency. In this era, CDs and CPs were introduced. When banks have more money, they have more liquidity. Corporates issue commercial paper and banks invest in these papers. These are quite liquid. And when the situation is different, when the business people have more money, they can deposit certificate of deposits which are issued by banks, and both of these are market instrument, provide good liquidity. Debt for and monetary management, RBI developed technical expertise in public debt management, improved the efficiency of the government securities market. The market became more liquid. International collaboration with Gulf countries. This is again the time when foreign exchange shortage was there. Economic ties were very much required. Then started economic reforms of 90s. Dr. Manmohan Singh, former RBI governor, became finance minister. Lot of initiative and help came from there. Here, RBI initiated liberalization by removing the ceiling on the call money rate, marking the start of interest rate liberalization, allowed banks to enter the mutual fund business, fostering diversification in the financial services. Credit authorization scheme abolition enhanced the operational freedom of the bank in lending decisions. Earlier, big ticket loans used to go to RBI for final approval. Then came promoting export oriented policies. In the early of 90, there was dearth of foreign exchange. Here, implemented interest rate relationship and foreign exchange market export competitiveness so that we can earn more foreign exchange than today we are earning. Financial market development facilitated the creation of the vibrant money market through structural changes and the introduction of new instrument. Modernized the banking system by emphasizing on profitability, productivity, and customer service. Along with sound banking practices, introduction of market-based interest rate on government securities allowed interest rate on 182 treasury bills to move up from the existing level. Structural reform in financial sector, focusing on deregulating interest rate and promoting financial efficiency. Balance of payment management at the early 90s, there was a BOP crisis, balance of payment crisis. It was managed very, very well by RBI, though RBI has to keep the gold of the nation for pledge by transporting it physically to Bank of England. When one RBI officer, he took it in a private jet and very secretively, from there managing it very prudently, and today we know our balance of payment situation is so strong. Some reforms then extended to the financial sector, phasing out of the ad hoc treasury bill. This is one landmark achievement of RBI. Somehow government agreed the credit goes to Dr. C. Rangarajan. He was the governor at that time. RBI earlier used to subscribe to all ad hoc treasury bill by finance secretary. That was called automatic monetization. So whatever extra expense government has made, RBI will monetize it. But here government agreed for a fiscal discipline. There were limits given to government under wage and means advance. Here in 2000, RBI created liquidity adjustment facility for managing liquidity in banking system through repo and reverse repo operations. Today also it is continuing. There were problems with the settlement of the government securities. Therefore, in 2001, CCIL was created. The problems actually went into scams like Harshad Mehta and Ketan Parekh. So here, a guarantee to guarantee this, a clearing house and settlement house was created in CCIL form for Indian government security market and foreign exchange market. SARFAESI Act is another landmark judgment in this landmark act here. It empowered bank and financial institutions to recover from non-performing assets without any court intervention. They got the right to acquire the asset. Introduction of RTGS. This was the era. If you have to transfer money, you will print a demand draft in one bank branch and then courier it to, or rather post it to some of the places by Indian Post. Money transfer will take a week, 10 days, 15 days, depending on the speed of the post. Here, RTGS came, instant money transfer, and a real-time gross settlement system. Before this, only NEFT used to be there. Adoption of Basel II norms in 2005 to strengthen the risk management practices and improve the stability of the banking system. Even the Basel norms which RBI followed are stringent. Then BIS followed in most of the places. Establishment of the Financial Stability and Development Council (FSDC), which is chaired by. Can you write that in the comment? I'm skipping. Actually, you have to also know something, otherwise, make some effort in knowing. FSDC was formed to strengthen the utilization of the mechanism for maintaining financial stability and monitoring macro prudential supervision. RBI playing critical role in this till date. Licensing of the new private sector bank. Actually, first private sector bank license were given in early 90s. The banks were UTI Bank, now called Axis Bank, SDFC Bank, and ICICI Bank, and few more. But here in 2013 2014, again new licenses were given. In between, Yes Bank and Kotak Mahindra Bank also 2003, two more licenses. But here Bandhan Bank and IDFC First Bank licenses were granted by RBI to new private sector bank, and also specialized bank, which are small finance bank and payment bank licenses were issued, enhancing the competition, enhancing the efficiency in the market. These specialized bank have actually built a different level of banking by focusing on payment and small finance. The target for priority sector for small finance bank are what, 75%, if you compare that with 40% for other commercial bank. Introduction to marginal cost fund based lending rate MCLR in 2016. This system helped in rationalizing the interest rate in the market. Coming to the post-reform period, demonetization of 500 and 1,000 rupees, you must have memories of this. The idea was to curb black money and counterfeiting of the currency. The success is something critical to talk about. Implementation of the IBC, Insolvency and Banking Bankruptcy Code. RBI facilitated this to streamline, and it has helped in resolving the insolvencies. Introduction of prompt corrective action PCA framework. The RBI revised the PCA framework to enable timely intervention and prevent further deterioration of the bank financial health. Dr. Raghuram Rajan was the governor this time, and UPI was introduced in 2016, supported the development of UPI. This revolutionized the digital payment in India. We know today UPI is a global revolution, issuing P2P, peer-to-peer lending guidelines in 2017, ensuring customer protection in this. Implementation of the legal entity identifier framework in 2017 to introduce to improve the quality and accuracy of the financial data. Ombudsman scheme was first time introduced in 1995. Please remember that. And here in 2019, this scheme was extended to digital transaction, and more more companies coming into the preview of ombudsman scheme. Ombudsman scheme actually help users if they have any problem with the RBI regulated institutions. They first complain to the institution. If they don't reply, they can go to RBI ombudsman. It is called banking ombudsman. Regulatory sandbox framework. It was launched to foster innovations in the financial services by allowing live testing of new product and services. RBI Innovation Hub is also one such institute owned by RBI, helping in the innovation of the financial product. Merger of the public sector bank in 1920. Big public sector banks were merged. Consolidation of the public sector banking to create more resilient, stronger institutions in banking. And now the last discussion is about the continued legacy of RBI system of check truncation. And this system implemented to enhance the safety of the check-based transaction. The transfer of money became faster and secure. Launch of account aggregator framework to enable individuals to access and share their financial data securely. Introduction of CBDC, central bank digital currency, with the help of the blockchain technology. It's RBI's digital currency to facilitate the use of digital currency in the country, which is a legal tender. Guidelines on climate risk and sustainable finance. This is the need of the hour to integrate climate related risk into a financial system and promote sustainable finance. RBI is proactive in this, enhancing the cyber security framework in bank. Cyber frauds are biggest threat today to the financial system. Comprehensive cyber security framework to safeguard the banking system. Introduction of Bharat Bill Payment System in 2017 to provide an integrated bill payment system across the country. And during the COVID time, RBI enhanced liquidity in the market. In fact, if you see the total effort by RBI in giving extra liquidity to market by having instruments, a very new type of instrument like TLTROs, targeted long-term repo operations to support the economy during the pandemic. The overall quantum of the liquidity support given by RBI was actually bigger than Government of India in those initial months. Operations of the optimization of the payment infrastructure development fund in 21 idea is to subsidize the development of the payment infrastructure in underserved area. And recently RBI revised the priority sector guideline to include new sectors and address emerging national priorities. What are the changes in this priority sector guideline? Can you write that in the comment? I have summarized some important 90 landmark decisions achievement by RBI, but the most important thing RBI, as RBI governor has written here, is stability. RBI has given the public trust RBI has today and the growth to the economy. RBI has been a very resilient institution, and RBI think is the only public institution which has the highest level of integrity, highest level of public trust. Therefore, in these 90 years, RBI has done something amazingly well, which is going to give a stable financial system in our country. Heads up to the effort of everyone who is building RBI, and all credit goes to RBI as an institution. You have any comment? Please write. You have any question? Please ask. I will try my best to answer. And if you are aspiring to join RBI, I have already told you, go to the demo course. The link is given in the description below. I wish you all the best.